Good afternoon, and today is October 10, 2023, and it is Tuesday. It's a second trading day of this week, October, and it is the second trading week of October. So for the last 3 days, we have a rally, especially on Fridays. It's rallying very hard. And today again, $2, right? $2.25. Today is open at 432.94, and it's close. Where is it close? It just said open. Where the close? Okay, we can go back to the chart and we see the close. Let's go to, so it opened at 432.94. Right here, right, that's the open rate, 94. And it's closed at 34.48. Yeah. And the high is like 437 something. If we see the high, 37.22, right there. So it give back about $3 right there. So for today, it's open at 432.94, and it closed 434.48. Okay, let's review right here. This is the 4-hour time frame, right? And yesterday we identified this key level right here, right? We identified this key level where we say that, okay, if a fall breakout happen, it can happen at this level. And we anticipate that, it could break, right? It will go up above this level and it will create a fall breakout. So basically fall breakout, then we will short them. That's our idea right there. Okay. And you can see that, for last 2 days, especially Friday, it's really huge on Monday and follow up on Tuesday, but it give back a little bit right here. So go back to the idea. That's how we see it from yesterday, and then how we implement our idea, execute our trade today, and see what lesson we learn. I think we learn a ton of very valuable lesson today. So basically we look to short because false breakout, right, to the upside. Then we learn to short. We try to short them. And here's what, shorts it up, right? The same, right? Basically we base on right here. So, pre-market, we look like, wow, it played exactly to our, anticipate right there. Not exactly in terms of the high it made right here. It closed above. That's critical, right? It create a fall break. That's our, our thinking at that moment. And we can see that we are, okay, we think that we can entry right here in the pre-market, or, right, look at this, right? When it move above our level, right, we put a sell stop and it come down is, right there. So it's execute, it fill our order right there. That's the first thing we want to try. Okay, then at the open, we put our sell stop at this level also, so we can try right here or try right here. and we put our stop loss about right here, so about 55 cents right there. It seemed like a very legitimate, right? It looked exactly our plan, right? Right? We either go in right here or we go in at 9:30, and the sell stop execute, and it moving out. Right? It looked legit, right? I mean, according to our understanding of the turtle submodel, turtle, that's what we believe, that's what we're thinking, right? Okay, keep going. We're gonna discover some very key aspects of this this setup, and that will help us tremendously in the future. Will give us a very valuable insight. Okay, then we get the stop loss right there. We got hit right there, right at 9:59. So basically, we're going at 9:30. I mean, for the matter when we go here, well, we are 9:30, right? So we got stop out at 9:39, which is about 29 minutes. We got stop out. Okay. Okay, here's the lesson learned right here. We failed to see that pattern. Okay. Yeah, it's one of the lesson learned right here also. So let's put that lesson. I want to put that into this lesson learned right here. Yeah, I want to move this a little bit up here. That's the lesson I want. Basically, we want to go back to reverse engineer to see how we forming our decision, how we forming our bias, right? We want to internalize what we thought at that moment, why we enter and what we are thinking at that moment. That will help us to see what error we made, right? That's the whole idea of practice, right? So you can learn, you get the feedback, and you learn, you improve. That's the whole idea of repetition, and feedback loop. Make better 1% every day. So we got hit right there, right? We got hit at this right there. Okay, let's see. We say we do a second try. We sort again. So what is that? Oh, okay. So we identify lead level, right, which is 434.24. We say it may be a maybe a 4 breakout day level. But now we look at this, right, because at that moment we're so caught up, right, we feel like, oh man, we just lose, so we want to get back. We try to improve. We are right. We're right. We shorted. So that's the mentality right now. Now we calm down and we are out of the trade already. So we review. We can see that we act in the way that that we should not act in that way. Right? We don't try to be right here. But it looked like that, like at that moment, that's how the mental game or the psychology aspects of our mind is really controlled right there. We don't accept loss. We try to be right. We don't listen to the market. right? We short right here and right here. I mean, now we look back right here. The market tell us a lot of things right here. We run a radio right there, and then right here we try to short again. And now we look back, we say that's a crazy idea. You know why? Because we're so naive to apply the turtle soup setup, right? The best turtle soup setup is when it's make a consolidation. It make a range, and then it create a double top right there. It look like a break, and it go down. But if you see a huge break right here, I mean, huge move up right here, like parabolic move up right here, then there's no way you're gonna apply the turtle soup right here. So that's our naive right away, right? We just apply this setup like I think more than a week or so. So we're still learning. So we need to give ourselves a room to learn. So at the same time, we are trying to internalize, how we make an errors, right? So we can learn, but at the same time, we don't want to be too hard on ourselves, right? Then we feel like right now we self-criticize, ourselves right here, right? So we had to walk in a very, balanced way right here. We want to receive a feedback, but at the same time, we want to be a very constructive feedback right here, right? We have to value ourselves, right? We dedicate a lot of time, a lot of efforts, so we don't want to be too hard on ourselves. Just remember, right? We have to value ourselves, subconsciously. We have to appreciate the commitment we have for this process. So we want to stay positive, okay? We don't want to personalize the error we make. We just want to keep it neutral. We don't want to attach any emotion in here. That's the thing that we need to learn. So this is just a feedback from the market. So we have to take it in a non-personal way. We have to remove any emotion charge in that. That will help us to learn and help us to remove all the noise, and we focus on the process so we can improve them. But if we put too much emotion on the errors we make, too much, we personalize, the loss we take or the errors we make, it will become very hard for us to go forward, because we're afraid, we fear a failure, right? But in this case, we should not afraid of failure. We should not afraid of making errors. In fact, the more error we make, the better we're gonna build for our system. So that's the whole idea right there. So a little bit go off track right there, but to try to emphasize on the mental game aspects of the training, or the psychological aspects of the trading process right here. So basically, go back here, right? We try to solve again because we try to be right? We cannot accept that we're wrong right here. So that's how we make that decision at that moment at 10:03, right? Around 10:03, right? Maybe 10:06, 7 right here, right? But now we look back, you see it doesn't make any sense. You see, it's a huge, up right here. We have to stay off from shorting this move. We cannot, naively apply the total shift in this situation at all, right? That's the first lesson, we learn. So yes, that's we can add in there, right? We cannot, naively, apply the total set of in this case source setup. When the markets tell us otherwise, right? It tell you no, well, then don't just keep power force your way into the market, which in this case a strong move up. Then what we do? We need to take a break. We must take a break in order to reset our mental right there. Otherwise, if we sit, and you can see that if we sit right there, the emotion will, the feeling of being right, really get us off the game right there. You keep chasing, make it to trade, to shorting right there. So we need to stop shorting, right? When seeing a huge up move right here. So that's the idea. So you see the huge up move right here is telling right there. But I will come back to this because when I rewatched the video this morning, we're recording, I see that, wow, how do we short when the market tells us otherwise? Okay, that will be the lesson next we're going to see. So that's the second try, right? And now let's see, we want to try short again. Okay, after that, we identify another level, right? We want to short again right here. So the same logic right there. It's a revenge trade. We try to be right, right? We try to be right. Okay, so we have to put right there. That's the mental game right there. Do not, try to be right, because that will lead us to what? To what? To take revenge trade. And that what? And ignore the market's signal, right? The market tell you that it will go long, but because of your revenge trade, the emotion is really cloud our judgment. We no longer see what the market tells us. That's a beautiful thing we learn right there. That's amazing. That's the real lesson for it right there. So we have to be cautious about our emotion right there. We can't. As a human, it's always there. You cannot avoid it. But the lesson for us is we have to aware when it show up. We be the awareness of that. Don't give in to our emotion. So don't identify ourselves with that emotion. We try to be right, try to be right. You know that when it show up, you'll be aware of that. Don't do any follow up. Because if you identify yourself with that emotion at that moment, then it will take over you. It will take over us, and that will lead us into chase trade and revenge trade. But if we are patient, if we are disciplined enough, we practice enough, we become the awareness of that emotion instead of that emotion itself. So remember that emotion come and go. The emotion of try to be right and try to take revenge trades, right? It come and it go. So our job is not to remove that emotion because we are human. It's always there. Our job is not try to resist that emotion, right? Because they say that the more you resist the emotion or the fear, in this case, fear of being wrong, right? You feel failure, being wrong. You want to try to be right. That fear, the more you fight the fear, the stronger the fear becomes. So try not to resist the fear. Just be the observer of that fear. Don't give any emotion attached to that fear. Just a thought coming, right? To observe it and treat it like a wave, the ocean, it come and it go. Don't give any emotional attacks right there. Because when you give it, you identify yourself with that emotion, that thought, it will take over you. It's very strong. And that's what we see, right? That's how we expose ourselves today. It's in the real time right there. We try second time, we try third time, and we put a note and go with a list to resistance path. Why we resist the market? Right there, the market's going up, but we try to short the market, we resist right there. That's the real lesson right there. If we don't took this trade, if we don't practice this trade, we never know that we have it. We never internalize this. Now we expose this. We expose ourselves right there. We can see how the emotion really cloud, how he really hijack our decision making at that moment right there. Instead, we listen to the market signal. We let our emotion, hijack, and it become a autopilot right there. It's from the unconscious. It's unconsciously controlled, but today we expose it. So the lesson for us is, be aware of the emotion, or on this emotion, or the thought of that, instead of, like it taking over. Okay, so we try the third time, and then let's see, what do we do? We try one more time right here, right? Wow, we try, and it look like it worked, but it come back there, and then it's gonna stop it out again. Yes, start out again, because if you look at a chart, right? If you look at a chart, I think 10:54. I'm gonna go back to the 1 minute. 10:54. Oh, okay, right here, 10:54 right there, right? We identify this. You stop it out again. You see, 11, top it out, keep going up. All right. Yes. All right. So the lesson learned for it is right here. Okay, let's do that. The very first thing we fail to see is right here. On the 5 minutes time frame, whenever you see like this, try not to short, just to go long. Even though the way we look, the markets from the 4-hour time frame, we thought it's gonna be a short, right? That's the mistake we make. We should not assume that's gonna be a sure short. We have to watch at that level to see how price react. If it's a fall breakout, then we short. But if it's not a fall breakout, we have to allow ourselves to switch side. That's the lesson we learn. But anyway, come back to this. Whenever you see the huge move up right here, and you see the consolidation right here, and look, what the first thing it do, it take the buy side liquidity. and then it dropped the sell side away. It just rated a little bit. You see, it not move much at all. Then that is the indicator for you that it's gonna go up and take more buy side liquidity. Yep, that's the signal that we're not seeing, and we come back to that point earlier. We don't see the signal, the market sent to us because we preoccupied, right? We preoccupied with our bias, and then we make the decision to short them, and that decision turned out to be a mistake, right? Instead of learning from our mistakes, stop and reset to see what the signal market get at, we go into the circle of compound mistake. We make another mistake, try to short again, because we try to be right. Go back to that, and we cannot accept loss. So, okay, and here's the second lesson we learned. Beautiful lesson we learned. Okay, so basically right here, yeah, I did mention it earlier. So in the early 10 minutes or so, we was at our level, right? The level here is the high of previous day, right? It's where the level we thought that we're gonna anti-short. Okay, let's assume that that's, that the level is short. But at the same time, we have to learn lesson. We have to keep in mind that right here it's 50%, right? If you short and you see the market is cooperate with our position, then we stay in. But if the market tells us the otherwise, then we have to close our trade right away and switch side, or otherwise just stay, stay off the sideline and reassess, rethink our bias, our strategy, our trade plan right there. But look, as soon as you saw it make a buy side liquidity trap right here around the first 10 minutes right there, and look at this. If you look in the real time, this morning, if we look in the real time, we did watch the video again on the first trading hour. We see how in real time it formed. This guy start our down close. It looked like it follow up right here and looked like the short setup that we tried to do turtle soup is working out. But all of a sudden it turned into a up close, very big, huge candle. Right now, when we look back, it doesn't look huge at all, but in real time it looks huge, and it's become an engulfing candle right there. It take over complete this way. That means the buy side, the buy pressure. I mean, that in other words, allows people, volume coming and buy it, buy in huge volume, and that's the reason why it manifests on this candle. So as soon as we see these two signal, or the market tell us we have to get out of a short right away. We have to cover our short right away. Don't wait until it hit, stop loss all the way there. Because normally the false breakout, which is turtle soup, you have to work right away because there are lots of liquidity trap right there. So as soon as it's a fall break, it will explode into the direction that we anticipate. But in this case, the opposite happened. That means the market tells us otherwise. I mean, that's a huge experience for us right there. So we trade this setup, the turtle soup, the second week, and here's the huge lesson we learned today. I mean, it's huge. It gives a lot of feedback for today. So in the coming week, we'll getting better to apply this setup. So the market tells us otherwise. That means we have to switch position right here. I let two signal right here. You can see that, right? The equal high, right? is a buy side trap. That means it's gonna go take that buy side. You see that? It take the buy side and just tiny pullback, and then boom, it go up from there, never look back. Okay, so this is, we already covered that. Yeah. Yes, so okay, I want to cover one more thing. All right, if we want to short them, then patient wait because of markets. If we want to go long, then good, we should go long. But if we want to go short because the condition is changed, then we have to wait. You see, if we want to short, we still have a chance short for today, not completely, don't have a chance to short. There are a very beautiful setup right here. Everything line up for us. The ICT, setup concept right here. You have auto block. You see, this auto block right here is close at 437.11, and the total short entry level we identify is 437.10 right there. So it's just 1 cent above that. So whenever you see the order block that's close above a so-called total sub level, which is, in this case is a resistance level, right, or the supply level right there, then that is very reliable, and the rest is the history. You see, as soon as that order block form and you see the huge, you see the fair value gap, a very obvious value gap, and then when the retest come, you short right away, and you see that you have a huge move right there. So if we want to short today, we still have a chance. We try to short too soon right there. Yeah, we try to short too soon, and when we wrong, we don't accept. When we failure, we wrong, we don't accept that. We try to be right. That's why we have a good feedback. But anyway, at least we can see that we expose ourselves in terms of the emotional issue or the mental game that we need to improve. But anyway, I think we have a good review for today. I want to take a look real quick on the weekly before we go close up today. So here's the weekly. So we see that 2 week is the up close. Wow. Let's see how this week closed, right? Here's a swing low, which is a bearish breaker right there. Let's see if this week so far you see that level reject right there. So far, let's see if it's open. If it open, no, I mean if it close above this this close right here. So let mark this one. The close is 436.50. Oh, today it go 37, right? And it retrace, so 436.50. So that's the key level right there. 56.50. No, is that right? No, I mean this one. We got the wrong candle right there. 36.50. Okay, because it's a weekly, so we give different color so we can color code them. Okay, now go back to the monthly table. So basically for the October actually is the the stack is for 30 year, it up 67.74%, so it above 50%. It will be up close. Very surprised. Is it the same for last year when October up close? So after 1 year is close above this, so that's a very bullish signal right there, if you can say that. Yep. Okay, let's wrap up right here. I want to go see how is this the weekly we just put right there. How is impact? Oh man. Okay, so let's see. I don't know what happened to my mouse. So here's the level that we are to point out on the weekly. You see it fall into the gap in the daily table right there. I mean daily chart right there. So I think this level have a lot of interest. People want to watch to see how it's react to that. Right, I want to see where 4. I don't know why it's 4 hour time frame. Yep, so it's close above that, and then intermediately it reversed back. So let's see how it play out this level for this week. All right, I think that's it for now. Talk to you later. Have a wonderful evening. Bye for now.